So we've renamed our valuation model for Google to BlackBerry as is. And basically, here's what we need to do. We need to take the income statement tab, the balance sheet, and the cash flow tab and overwrite it, cell for cell. Right? 95% of the time, the data that comes out of Bloomberg in the standardized format will work cell for cell. 5% of the time it doesn't, and then it's just a little tricky in cutting and pasting. The one that usually is tricky is the income statement. So what I mean by that is I just need to verify this, and I didn't do this before the class. So we open up the Bloomberg income statement data that we exported, and we just want to verify that on the income statement in our model that those cells actually continue to match up. So row 30, net income available to common shareholders, net income available to common shareholders. Row 43, diluted weighted average shares. Row 43, diluted weighted average shares. Because as I said, every now and then, one of these rows could be missing. Doesn't happen very often, but when it does, it can cause you little problems. In this case, it didn't. So here's what I want to do. I want to select the entire income statement in the BBIS file, copy it, go into my model for the income statement tab, select the whole tab, paste special values. So I'm basically just overwriting by paste special the values. What was in the BlackBerry income statement tab with now what's in my model income statement tab. Don't paste. If you paste, you'll have relative references to that other Excel file. And that will cause you problems because every time you open the model, it'll try and say, oh, you've linked to this other Excel file. So don't just copy and paste stuff in from another spreadsheet. Paste just the values. So select all, copy, paste special values. Yes? When you say all the way at the bottom?
The reference items?
Reference items we don't use. Yeah, so that's what I said. When I mentioned, I think a few classes ago, Bloomberg and reference items are non-standard. Everything above reference items is 95% of the time standard. Where it becomes less standard is when you use not US companies. And that's why, because Research in Motion is actually a Canadian company, sometimes when they go with international companies, they don't always follow their exact same standardized format. That's why I was a little nervous after I'd picked them, whether or not something could be different, but it doesn't appear to be. All right, so it's just always good to check. The way you'll know that things are different is if you copy paste things in the model and your CFI doesn't balance, because that means something got copied and pasted in incorrectly. All right, I want to do the same thing with the balance sheet. So I want to open up the exported balance sheet for BlackBerry, select the entire balance sheet, copy it, go into my balance sheet here, select the entire balance sheet, paste special values. Again, don't just paste, because if you paste, you might actually put in relative references to the other spreadsheet. You don't want to do that. And again, just visually verify assets are line 27. And in the RIM balance sheet, assets are line 27. Liabilities end at 43. 43. And again, reference items are non-standard anyways. And then cash flow, same thing. Let me go to the statement of cash flow. Select, copy, go back to my valuation model, cash flow, paste special, values. Save. All right, so I've basically just overwritten the Google data with the BlackBerry data. Right? Then I go to my assumption screen. Right? First of all, I want to check the years. So their last completed year, notice, easy to see this in the balance sheet, was fiscal 13. They've already reported fiscal year 2013. So they're in fiscal 2014, right? Because they're not on a calendar year. So there's an easy change in our model for that. We go to assumptions. We change the last reported year, 2013. That's why we made everything a relative reference. And then everything should automatically update throughout an entire model. right? So second, their WACC is going to be different than Google's. So I look at my screenshot for the WACC that we took for BlackBerry, 13.5%, 13.5. Their shares outstanding are going to be different. Remember to always change this one, because if you leave Google shares outstanding in, you might get some crazy share prices. Right? Their shares outstanding off the DES screen, 524.2. 524.2. Right? And then finally, the EEO screen. They have different earnings estimates. They're a different size company. Now these are, remember, in Canadian dollars, but it shouldn't matter because we're using a Canadian cost of capital. So sales next year for 2014, sales 13,012. 13,012. Sales in 2 years, 11,955. Profit, negative 77.559. Profit 2, negative 304.308. And then finally, goodwill and pension. Those are reference items that are not always in the same place, and our model needs them. So what I have to do is I have to go back to my balance sheet, the Data BS tab, scroll down, look at the line that says goodwill, which in this case happens to be line 66. Just take all that data, copy it, go to my assumptions tab, and paste special values. And I have it set up so it goes from newest year on the left to previous year on the right, so you can just copy and paste it out there. And the ones in yellow are the ones that matter, even though it has 10 years of historical data. And the same thing for pensions. So I have to look to see if they have a pension obligation. And I don't see a pension obligation here. Not in the reference items. So therefore, if they don't have any pension obligations, then what I do is I come back here to assumptions, just make sure they're all zero. Yes?
So why did you change from like 13,012 to 77.559? Why is it 77,000? Is it because
77 million? These numbers are in million. So right now, the forecast for the earnings estimates for BlackBerry is negative 77.559 million. That's the earnings estimate. So I had to put in the actual operating profit estimate.
Oh, so the sales is in billions, which is why we put it as
Sales are in billions, but see where it says million?
Yep.
Yeah. But 13 point whatever billion, 77.559 million, it's 17 versus 13,000. So that 77 should be the right. So that's the point. Right now, the model is predicting that they're making money, and the consensus says they're losing money. Now, part of the reason, and this is the other tricky part of reusing the spreadsheet, remember what we've done here is we have hard-coded in some changes for Google. And if I leave the Google numbers in there, then I'm going to get some crazy things happening in my model. So what I want to do is I kind of want to undo what I did for Google. So therefore, with revenue, that's one of the things I changed, equals the previous year starting in 2016, copy and paste that forward. And then for cost of revenue, same thing. For 2016, equal previous year, copy and paste that forward. Those were the two numbers that we changed for Google, because I left the tax rate the same and left everything else the same. So what I don't want to do is and then actually 2014 and 2015, I made the modifications to revenue. So let me take those out too. So let me go back to 2014, 2015. I now have to match this consensus. So I have to reduce my cost of goods sold by 7.53. So minus 0.0753. And then minus an additional 0.0195. Minus 0.0195. So I now should match, oh, wrong way. Plus, I now should match the assumptions that the market has for research in motion. Right? And by the way, the model is now forecasting a $10 share price. And remember, we're trying to get to 1102. So we're trying to do the as is. Everybody see how we got to this? This, by the way, is going to have its own name this semester. It's a made-up name that means nothing outside of this class. I'm going to call it the baseline. And what I mean by baseline is we basically put the model, all the data in the model, so we're ready to create the as-is valuation. All right? So now from here, we do an as-is and we do a final. Everybody with me on that? So we'll have three models. We'll have the baseline, where we just put the data in. We'll have ready to go. 2, we'll have the as-is valuation, where we match the current share price. And 3, we put in our own recommendations. All right. So here's what I'm going to do. I'm going to take this baseline file, which I've just saved, and I'm going to upload it to Elms in the BB folder. So you'll have this file as well with all the data that I just put in, hopefully correctly. And I'm going to give you, I'm going to pause this video, I'm going to give you the next 5 to 10 minutes. And I want you to create the as-is valuation and create a final valuation. Okay? So practice doing that. And you're welcome, if you've been putting the data in along the way, do it yourself. If you haven't, you're welcome to take my baseline file. And again, you'll have the video as a guide.